So right now, to Thomas Hayes, the chairman and managing member of the Great Hill Capital. Thomas, one of the things that I was trying to glean from Jerome Powell is the stuff he said in between, where he talked about the risk of holding rates high for too long. That's a real palpable danger. And I got the impression again and again, he doesn't want to invite that. Now, I don't know whether that signals, depending on your point of view, a rate cut this year. But it's the first time he has pounded that theme. There is a danger to just keeping rates where they are now for too long. I guess the distinction here, what is too long? What do you think?
Yeah, I think it's already too long, Neil. He acknowledged clearly the considerable cooling in the labor market that we saw Friday, unemployment ticking up to 4.1%, and the market and acknowledging his dual mandate. So the market has pretty much now priced in 97% chance of one cut before the end of the year and a 75% chance of two cuts before the end of the year. He's simply too restrictive. 200 basis points above inflation is meaningfully restrictive, and we're starting to see the economic data slowing pretty quickly.
So when he talks about keeping all options open, but he hints that he's going to need, I assume when he's talking about friendly inflation data, what's coming down the pike soon that could close the deal on that or push it back?
Yeah, I think tomorrow, certainly this week, Thursday and Friday, we get the CPI and the PPI. Headline's supposed to be 3.1% year on year, but 0.1% month on month. And PPI, which is a leading indicator, is supposed to be 2.2% and 0.1% month on month. I think anything in line or below with the labor market cooling confirms what the market is already saying, which is 75% chance in September, 97% chance in December. I think they've got to move.
What do you think of how it looks if you move in September before the election? There's some cover doing it afterwards, but you're quite right. History has shown time and again the Fed has moved in election years, sometimes very close to the election itself. But how will that go down?
Yeah, I think both sides will use it one way or another, whether they move or they don't move. They'll blame the Fed. That's a natural action by politicians. But at the end of the day, the economic data is dictating. As a matter of fact, June was the first month since October 2020 where zero global central banks hiked rates. And the last time before that was March of 2009 and December of 2001. All of those times were good times to buy cyclical stocks, meaning maybe we're going to get a reprieve from some of these leaders that have led the first half of the year.
Well, the S&P and NASDAQ with the gains today, modest though they are records yet again. We keep doing this day in and day out. Not so much the Dow. What do you read into that?
Yeah, I think the market is really in a holding pattern until there's some clarity on the rate cut coming in September. We're looking for the July meeting. We're looking for the inflation data. We're looking for earnings. We're looking for everything but politics. No one really seems to care. The market doesn't really seem to care about politics right now because they know what they would be getting with Trump. They know what they would be getting with Biden. And if it's not Biden, we're not going to know that until August 19 at the Democratic National Convention, because they don't want to give up the $100 million war chest by him stepping down too early.
They would have to give that up if, for example, it's not Kamala Harris. Otherwise, it would go into a pact. You're quite right. You know, the markets generally, from my history, and I'm very, very old, tend to sort of get the market's attention late summer, early fall, more often early fall, before they move based on what they think might happen. How do you see it going this year?
Well, you have expectations for almost 9% earnings growth year on year this quarter. So earnings is going to be pretty critical. And the last few quarters, the bar has been very low. The bar is kind of high here. And even if you get a beat, maybe it's only 10 or 11% versus what we've been seeing of 3% beats. So I think we're going into earnings season with very high expectations. And what I found, Neil, is the secret to happiness in life is low expectations. So let's watch out. I think we'll probably continue that seasonal summer strength for a few more weeks, but I think as we get into fall, maybe a bit more choppiness, a bit more rotation under the surface that we should be alert to.
Well put, Tom. Don't wander too far. By the way, I built a career on low expectations, so there's something to be said of that, young man. But Thomas, again, look forward to talking a little later in the show. Down about 29 points, as I said. We're seeing pick up in the S&P and the NASDAQ, and of course they hit records the last couple of days. Anything more, you got another record. Edward Lawrence in the meantime.